All right, guys, welcome to the weekend video. This is Christian from Hertz Tropica Trade Group, and this is your market video for this weekend, getting you ready for the trading week. Okay, so we'll start with the S&P, and we'll start with a little bit of the end of the week's events and kind of how we wrapped up for the week. We'll talk a little bit about option activity, what that was revealing for this week, and the week ahead, and the technicals, and not just in the S&P, but some of the major indices globally, as well as some sectors that are showing some strength. So we've got some things to go through pretty quickly. So we'll start with the S&P. Ended up pretty nicely. We had a nice kick save last week. If you watched last week's video, I kind of I had a little bit of more of a negative tone, a negative. It was a little bit more pessimistic. I didn't like how we kept on making, and basically what we've been doing for the last couple of months is been making lower highs, right? So we still need to punch out here. We've got a major decision coming up ahead, but we're leaning to the upside of that. I'll call it decision tree, or basically the I've kind of been calling it the triangle of death. It's not the triangle of death, but you kind of see where we've been going at. And I don't have a bottom line drawn here, but I'm using the 200-day moving average. So we've come upon this a couple of times. Wednesday, it looked pretty ugly midday, but we came back and we managed to salvage the day. You've got a nice hammer bar. We're back above the 200-day moving average. By the way, the 200-day moving average has been rising. So it's been a higher hurdle to make sure that we come, it would be a different story if we came back to the February lows for the last, 3 or 4 times. But we've actually been coming back to the 200-day moving average, which is rising. So it's not terrible. But of course, a lot of people are looking at that 200-day moving average for us kind of breaking trend. So, the bottom line is we held it last week when things looked pretty bad, and we rebounded pretty nicely. So we still have some more work to do. We've got to get out of this downward trend line, and we've got to start making some higher highs rather than higher lows. So that's going to be the major story for next week, and I think that's really what you want to keep an eye on for next week, is if we can get above that level. Also, this 2686.5 level, that's going to be something to watch for next week as well. You can see that we're already starting the week up 20 basis points. We'll see. That has not been a recipe for really good things the last couple of weeks when the futures are up. I don't know how things are going to open up tomorrow at 9:30, but that basically has not been a great thing for when S&P, when futures kind of lead into, but maybe we could get out of the pattern. Eventually we will get out of this pattern of, when futures are up in the morning and we get a sell-off. So we'll just have to see, and you kind of just have to sit tight with some positioning. What I want to talk about is basically, I'd like to start off every video and talk about what we know. The S&P, the diamonds, they were basically flat last week, but there was definitely strength out of NASDAQ and there was strength out of small caps. So I wanted to look into both of those charts as well, not just the S&P. And really, while I'm bringing up these charts, I like to look at basically what's going on underneath the hood. I don't want to look at just the S&P. I think some people get very focused on that, and they don't realize what's going on, where the relative strength is in the market, what sectors are breaking down, what sectors are showing the relative strength. Because again, we're not forced to just trade the S&P. We've got a whole bunch of different avenues that we can trade, but the NASDAQ showed some nice strength. It's been going back and forth. It kind of failed a couple times instead of last week, maybe the last week and a half, it failed at the 50-day moving average. Well, it finally started to get going and had that strength and got back above the 50-day moving average. But on the flip side, all it will take is one day for us to get back into this range. So we need to have that follow through next week. So what else do we know from last week? Well, we've got another week of earnings behind us. That's a good thing. I think always earnings season is very difficult to swing trade, whether or not you're following option flow or you're just you're using the technicals to trade. Through earnings season can be a very noisy time And I always think it's better to position. Besides this, this quarter was a little bit different than the others, a little bit more dramatic. But I've always said going into earnings, you want to be positioning lighter than usual. See what the earnings season reports, and I think basically it's not just the individual investor. It's also institutions. They're doing the same thing. They want to know they're hedging themselves if they've got big positions. They're using options to buy puts to hedge tail risk in case companies that they're invested in, if they report a bad quarter, they want to be hedged for that. So that's a lot of what we see in the option activity. And I think a lot of investors and institutions are sitting on their hands during earnings season. They want to see how the quarters, they want to see what management is going to say about future growth. Again, it's always just a quick sentence or two about earnings season is it's not always important about what they did last quarter. People want to know what they're going to do, what their guidance is going to be going forward. That's really where the clues and where people are putting their money into how management is thinking about the current environment and what they're doing over the next quarter and what their guidance is over the next year. So that said, we're coming out of it. We've had 2 big weeks of earnings. Earnings season is not finished. We've got a number of really interesting names that report. NVIDIA reports next week. That should be interesting. But for the most part, we're now getting out of those really busy weeks. So I think it could only get better in terms of that, and only trends will begin to kind of, I think, start to take shape again, considering that all these major companies have already reported. And then lastly, on Friday, I'll go back just to the S&P chart, or we'll talk about Apple, I guess. But Warren Buffett came out and said he was buying stocks over the last couple months. This is really positive. Somebody on Twitter gave me a hard time about this. They said, well, and I agree for most of the, whenever you're reading like the 13 Fs and what hedge funds took stakes in companies, to me, I agree with this person who was giving me a hard time. They were saying that, well, it's all in the past. That doesn't, how am I supposed to invest? That doesn't give me any feeling about investing, now. All that happened in the past. However, he's Warren Buffett. He moves markets, right? I mean, the last time, if you remember, and I'm sorry, I don't have the exact date, but remember, I think it was about a year and a half ago when Jamie Dimon decided to buy stock in his own company when the sentiment was really, really, bad, and everybody was extremely bearish about the overall market. Jamie Dimon came out and said he was buying back shares, and that gave the market some well-needed confidence, and we rallied that after. Now, that wasn't the only reason why we rallied, but at points where the sentiment gets really, really in the dumpster, and when someone like Warren Buffett comes out and says he's buying because things are at a discount, it means a lot, and you have to remember that a lot of the market is not only run on fundamentals, but is also run on sentiment. So when somebody like that comes out and says, "Hey, it's a good time to buy," which I don't think he necessarily completely said, but I'm kind of paraphrasing. The fact that he went out and bought more stock in a few different companies, obviously Apple being one of them, really says a lot, and it also kind of gives people who are really worried to say, hey, maybe it's not a bad place to start to accumulate stock. So it does make a difference, in my opinion. All right, so that was last week. Those are the main things. The other thing that I wanted to talk about was just small caps very briefly. Small caps I always view as a leading index. When the small caps start to get to the higher range here and start to break out, I think the overall market is going to follow. So they had a strong week last week. They outperformed. They were up 1.7%, and they're up at this top of the range. They need to get above 156.56 for that follow through, but I think it's showing some signs of strength here. A few points that I wanted to make out of fund flows. So anyway, that's kind of what I think is basically to watch. We need to start making to get out of that range of the downward trend line and start to get ahead there. And I think that'll be good confirmation for the overall market. So Fund flows, I like to spend a couple minutes on this every week. Pretty defensive overall. There was $2.7 billion of outflows. International ETFs, which have been a strong point, they actually saw $1.6 billion of outflows again last week. Fixed income flows, which has been getting a lot of press recently, they quieted down a little bit. They've been seeing several weeks of strong inflows in fixed income ETFs, a lot into the short-term treasury ETFs. Those kind of quieted down a little bit last week. So overall, like I said, very defensive. You could see the sectors, a little bit of dip buying, I think, in consumer staples. Utilities, that's the second week of big inflows on very close to the top of the leaderboard in terms of utilities. Healthcare, which is very interesting to me, saw $637 million of outflows, also industrials. So like I said, pretty much risk off last week. And a lot of this was in the beginning of the week where the first 3 days where things looked pretty ugly, a lot of outflows took place. Also consumer discretionary. REITs saw some outflows as well. So there just wasn't that big risk taking, and I think people were more worried than anything else. But that's just a little bit of paraphrasing for the overall. So despite this, $637 million of outflows, we're going to have a webinar of the Tribeca Trade Group. I like to go over certain pockets of strength, and I'd like to expand upon that. Take a look at, so first of all, the big ETFs, right? XLV, XBI, IBB, the biotech, the big healthcare ETF, all seeing outflows. Take a look at which ETFs actually saw inflows. Look at this XHE ETF. This is equipment. Also, medical devices is also. You take a look at at these two ETFs. Right, this is XHE. Really interesting if you look at some of these companies and look at the strength. Look at the top 5 companies: DXCM, INGN, ABMD, QDO. So pretty, I would say, small cap companies. But you take a look at a couple of these charts, right? So we'll go over to look at just the top 5. Like I said, I'm going to give a webinar to talk a little bit more about this and to talk about how you can play some of these names. But look at this one, Dexcom, 52-week high. INGN, Inogen, almost a 52-week high. Nice move on earnings. ABMD, right? So look at these. I mean, does this look bearish to you? I mean, these names have absolutely crushed it on earnings. All these companies. QDEL is another name. I think they report earnings next week. But look at the strength in this one, and it goes on and on and on. So look at this one. Integra Life Science companies. How strong are these groups? So you could tell I'm excited. Look, and there's another one in here, Massey. This is a name that I've been following because we saw call activity a couple weeks ago in this one. Now I didn't want to hold this name into earnings, so I've just been kind of watching it a little bit. But after a big run up, right? Look at the big run up in this name, and it's been basing. This is a $97 stock now, but this is a pretty interesting medical device company, right? So really so this is what I look for. Somebody asked me this weekend. They said, well, what are you looking for when you analyze these fund flows? This is basically it. So there's about $50 million. Sorry, I'll give you the exact number. $48 million, which is an increase in about 18% of the fund of XHE, healthcare equipment companies. So essentially a lot of medical devices. And the IHI ETF also saw $67 million of inflows. So really, you have to, that's why I watch ETF fund flows, is because I didn't know anything about these companies before, but somebody's been adding money into this group and they're really strong. A lot different than looking at Gilead, a lot different than looking at Celgene or Regeneron. There's something going on in these names. So, we're going to give a whole webinar on these names and go into a little bit more in-depth detail. So stay tuned for that. That'll be next week. But again, I like to find the strength, pockets of strength in this market that are really outperforming. And just by going through those charts very quickly, you can see that there's plenty of strength. All right, so I wanted to touch upon that. International, I think you just have to kind of sit on your hands with some of these areas. I would love to get into some of these areas. I'm watching the China fund flows. The China internet, obviously Baba reported at the end of last week, had good earnings. We'll see how that shapes up. I've got a number of names that I'm watching, but I'm not going to go through all of them. But things like Europe now 10 weeks in a row of outflows. So you just have to sit on your hands with, I want to invest more into international, but until really they stop showing distribution, that's really where I want to get involved. But yeah, it's literally been 10 straight weeks of outflows in Europe, and you could see Germany had 306 million. Good inflows to HYG last week and to some of the high yield bonds. They had $937 million of inflows. So again, not so bearish when you see high yield bond ETFs getting inflows, right? So a couple positives to kind of get away from this. All right, so now I wanted to talk about some setups for next week. I talked about this, kind of just talking about where I added to some put some new money to work towards the last week. This is ITA. This is the Aerospace and Defense ETF, right on the 200-day moving average. I love these trades because they're very easy. As long as you're a disciplined trader, this is a very easy trade for you. Now, without making any predictions, I'm not one of those guys who says, "Oh, it's guaranteed to go up 20%." I have no idea. I have no idea where ITA is going to go, but I have a level to trade against. When you're a professional trader, will not make predictions. They will talk about where they get an entry into a stock or into a sector, and they know exactly where to get out of it. So if this ends up breaking, by the way, beautiful candle here, nice confirmation. It has a lot of work to do to get above here, but what I do know is there's the 200-day moving average at 185.95, and that'll be my stop price. If it doesn't work, it'll be a small loser. That's defining your risk. Same thing, and you could go through a couple of charts. I think Boeing looks really interesting here. I think it needs a couple days. A move above 341.81 would 341.84 would get me excited. So you set an alert there, and if it hits there, great. For now, don't make any predictions about what you think Boeing is going to do. Wait for a little bit of confirmation. So many traders, they want to pound their chests and make predictions. Nobody knows. Nobody knows where this market is going to go. The best you could do is set up put together, wait for some confirmation, be patient, and trade against a respectable level, such as the 200-day moving average, and see where it goes from there. Ratchet up your stops, take some profits, take some targets, and let your winners run. That's what it's all about. It's not about making predictions. Raytheon, same is one of my favorites as well, just a little bit above the 200-day moving average. Quality name, I think. Use your stop 200-day moving average. All right, there's a bunch of other names. I'm not going to go through all of them. Same thing in the semiconductors. Look at what the semiconductors did last week, right? They bounced around that 200-day moving average. This is not exactly confirmation. Friday's candle is confirmation that 200-day moving average, nice bounce. Take a look, also showing an MACD crossover. I think pretty positive here. So I went long SMH. The biggest weight in SMH is Intel. I think it looks great, had great earnings. NVIDIA reports also one of the biggest weights next week. I think could run into their earnings report. A couple other names here. I like Applied Materials, also just right barely above the 200-day moving average. MACD crossover as well. I think it looks pretty good. All right, so that's a couple names in those sectors. Also where there's been tremendous strength, if you saw my interview on Bloomberg about a week and a half ago, I talked about IGV, which is the software application, infrastructure, enterprise software names, all very strong, and they've been showing strength all along. So the IGV ETF, I actually have my own index that I put together, which is a little bit different, which is business technology, but you could take a look at that. A little bit more business software companies and cloud companies. No weakness at all, in the last 3 months, whereas, S&P has been kind of floundering a bit, but these names are really strong. So you look at your Salesforce, which I've been in and out of, don't have a position. By the way, I will always tell you if I have a position. This is not a game for me of sending out 100 symbols on Twitter and then clapping about the 10 that went up. I will tell you right away, all the time, if I'm long, short, don't have a position. I don't know why all these jokers on Twitter don't do that. They would rather tell you after the fact that it goes up. But right now I don't have a position in Salesforce, but I want to be long that name. Same thing with Adobe. I think Adobe looks pretty good. I do have a position in Splunk. Splunk, we put on a couple trades last week. I rolled some calls out to August. I think it looks very positive. But you could go through a couple of these names. Another name that I'm watching is Coop. The CEO was on Kramer last week, was pretty positive. I think this wants to take it next leg higher. Another small cap name in the space is Vive. Had great earnings, been kind of just hanging out for a little bit. So I think another good name to watch in this space. But there's literally about 10 different names in this space. Now you can't own all of them. You can own the IGV ETF, and then you can kind of pick a couple names that you may like. But I think Adobe and Salesforce and that Splunk are some pretty good names to start with. A few other names or a few other areas to kind of go through. Yeah, Red Hat is another name. I mean, where's the weakness in this name, right? Very, very strong over the last couple months. So if you do your research, you will find these names that are holding up extremely well and have that relative strength. And that's why, for the time being, which I can change in a couple days next week, if the market breaks down next week, I'll change my stance. But right now, I'm constructively bullish right now in the short term. PayPal. All right, so let's talk about PayPal for a minute. So PayPal, the chart, not so hot, right? I mean, it's come into the 200-day moving average. So nice thing about this is you've got your level to define again. You've got a nice level to define against. But the chart kind of looks like it's been breaking down. Earnings, they had good earnings, but the price action has been lackluster. However, look at the call activity. And I've got this up here in Trade Alert. They've just been really going after this name. I'm long this name. I think if you're one of those individuals who follows option activity, this is what you're looking for. When they come after PayPal, not only they started purchasing it after they reported earnings, not before. So they took the information that they got from the earnings call, from the guidance, and they went ahead and they bought calls. There was a rumor about Amazon building up they want to have more service in this area of people using their financing. PayPal sold off hard. What did somebody do? They bought more on the dip. So that's what you want to look for, is when something bad happens in a name, somebody to continue to buy it. So I don't know what else you would be asking for if you're one of those individuals who follow option activity, because they've gone after PayPal like nobody's business. So if that's your game, and if you're following option activity, I can't think of a reason why you would not be owning PayPal here, because this is the biggest option activity that we've seen in a name post earnings, and last week is in PayPal. So I think if that's your game of following option activity, then you have to own a piece of PayPal here. Again, this video is for information purposes. I'm not giving you any recommendations, but they have been buying PayPal like crazy last week. So I have a position, and I'll be adding on weakness in PayPal. So that said, a couple other names. Devon Energy has been another name where we've seen a lot of option activity. And you look at oil, which I wanted to talk a little bit about commodities, but oil has now, after spending about 2 weeks in this little range, went higher on Friday. So it's now at a level, I was worried about this purple line, this virgin point of control. We do often see digestion after we take one of these levels out. And we saw that. We did not see digestion in a breakdown, which we could often see when we hit these VBOCs, but we're now actually higher. So I think it's game on for energy names. So Devon has been the name where they've been aggressively buying. What's going on in this chart? It's above the value area. It's above the 200-day moving average. And it's off the highs from when they reported earnings. So I sold up here, and I've added back in here. And I think you can continue to do that, because if you look at the open interest for Devon, they still have a huge position out in October. So you could kind of use that to trade around. So if we go to this, just so that you could see this, and so you can see I'm not making this up. And you got 31,000 contracts. Again, this is not small stuff. $2.90. So, forget about I don't tweet out every time there's option activity in a name. Again, I'm not playing a game here where I'm trying to list option activity in every name. I want the best signals. And again, in this market, you cannot be in 30, 40 positions. You can't do it and make money. So, I'm not going to be that guy who sends out every time there's option activity, somebody buying 200 calls in a name. And then this way I can call it later when the name goes up. No, that's misleading people, I think. I only want to take the best signals out there and have concentrated positions, and then be able to trade those positions very well. BHP is another position I like. I like this on the daily chart and the weekly chart. So, I think people who do that on Twitter tweet about every time there's option activity, regardless of its quality or not. I think that's really misleading. Retail investors a lot. So I don't play that game, and I will tell you whether I'm long, short, or don't have a position in it. I'm not here to pat my own back, and we're here to make money. We're here to look at the setups and whether or not they're quality setups or not. So I have no problem always telling you if I'm in a position or not, but so regardless, I'll stop going off on a tangent. BHP I think looks pretty good. This was the support a couple weeks ago and has been basing and moving higher. So this one you have to have a little bit of patience with. It is moving higher, but it's not doing it exactly in a straight line. So you take a little bit of profits and maybe you add on a little bit of weakness, but a lot of open interest on that name as well. All right, so that is it for this weekend's newsletter. Like I said, we'll be giving, I've got a bunch of other setups that I'm only providing Tribeca Trade Group members. And also we'll be giving a webinar on those, where the strength is in healthcare companies right now, which in that medical device equipment space. All right, so thanks for watching this weekend's video. Have a great week trading, and hope to see you at Tribeca Trade Group. Thanks very much.